Hi, Christian Baldwin here with Black Diamond Mergers and Acquisitions. This week we're actually on the road, traveling to see a client and then going out to a Mergers and Acquisitions conference in Scottsdale. And really the majority of the attendees that are going to be at this conference are private equity groups. And it kind of got me thinking, what types of buyers are in the market today for privately held companies? You know, if you own a company in the United States, what does your buyer really look like if you begin to think about how you might exit one day or even transition out of your business? Well, of course, you can go to an individual buyer, and there are lots of those that are out there. You might even consider selling to an employee or a group of employees, and that can be done with a private transaction or through an ESOP. Or you could go to the market and look at other types of buyers, and you kind of break those down into two main categories. One, you might hear the term strategic buyer, which really is a fancy way of saying a larger company. So it could be a company that's a competitor today of yours, or it could be somebody that you don't really compete with, but maybe somebody that has a ancillary product or service that would really make a good target so that they can start to sell your product to their existing customer base. Those are some of the strategic buyers that you might find in the market. And then you have another group of buyers called financial buyers. Financial buyers can vary in different types and ranges and sizes, but for the most part, we'll talk about two of them here. One would be a family office, or a group that's managed by a team of sophisticated financial advisors to manage the money of a family or a group of families that are all put together. That's one group that might make a good investment. And the other would be private equity groups. And since we're going to meet with a bunch of them later this week, just to get on their radar and vice versa, to see what sort of deals that they want to look for and what deals we have to offer them, private equity groups can be really good, a good option for a company that wants to exit. And depending on the size and industry, they'll typically want to hold that investment for 5 to 7 years and then look to either add it on to an existing portfolio or platform of companies and then flip it out down the road. Or they might want to have a more of a long-term hold on it. What's most important usually is the management of the company, and so they might really want to retain you as the seller for an extended period of time, if not a manager that can really manage the company and help it grow post-close. So when you consider all the different options that you have in the market, if you're thinking about selling now or down the road, those are a few things to consider. If there's anything we can do to help you as you consider your exit strategy and transition and how you take your company and hand it off to the next team or investor or whatever the case may be, please reach out to us. We're happy to help and educate you any way we can. Thanks a lot. Have a great day.